Welcome to the Deep Dive. Today we're tackling a big question. Is Zaggle Prepaid Ocean Services genuinely simplifying spends? We've got their latest investor presentation right here.
Yeah.
We'll be digging into their Q4 and full financial year 2025 performance. Plus, we have the independent auditors' reports, both standalone and consolidated. Our mission really is to look past the headline numbers and understand what's actually driving this company's growth.
Exactly. It's one thing to see revenue go up, but we need to understand how is it sustainable and what does it signal for, the future of spend management overall.
Okay, so the presentation leads with their tagline, Spend Simplified. The visuals suggest, well, quite a bit. Employee expenses, rewards, maybe even fleet stuff and international payments. Lots of logos.
hmm And it's signed off by their company secretary, Hari Priya, dated May 12th, 2025, which, just sets the stage. It reminds us this is primarily for investors, so we need to read it with that in mind. They're obviously putting their best foot forward.
Definitely. So let's jump into those key financials, Q4 and the full year FY25. We'll start with the standalone performance. Sounds like some record-breaking figures.
They are, yeah. The presentation really hammers home record revenue, adjusted EBITDA, and PAT, profit after tax. That's for both the quarter and the full year standalone.
Okay, and the revenue from operations that saw a pretty big year-over-year jump. What's the engine behind that growth, according to them?
Well, Zaggle points to growth across, all their revenue streams, which sounds positive on the surface. They specifically call out their Zoyer solution and organic growth in what they call save and propel products. They also chalk it up to bringing on new clients and users, plus, successfully cross-selling more services to the clients they already have.
Right, more clients, more sales to existing ones. That sounds solid.
It does, though, when they say growth across all streams, it makes you wonder if maybe one or two are doing the really heavy lifting. Understanding that mix could tell us more about sustainability.
Good point. What about the costs? All this expansion must cost something. Employee costs.
Yep. Employee costs went up. They link that directly to business expansion. You need more people for more business generally. So not a huge surprise there.
They also mention incentive and cashback expenses. And it's a bit weird down in Q4 year over year, but up for the full year. What's going on there?
Yeah, the full year increase they mention includes higher costs of funds tied to their credit card portfolio. So maybe they got a handle on some specific incentive costs in Q4, but the overall growth, especially in credit cards, pushed the full year expenses up.
Okay, that makes sense. And depreciation. That rose too. Why?
That's mostly because they capitalized some big product suites, specifically Zydex and Fleet Solutions. So instead of expensing the development cost immediately, they're treating it as an asset on the balance sheet, which then gets depreciated over time. It reflects the investment in their tech platforms.
Got it. And they give a heads up about ESOP expenses for next year, FY26. What are ESOPs, quickly, and why flag that?
Right. ESOPs are employee stock option plans, basically giving employees a chance to own shares. It's good for attracting and keeping talent, but when those options get exercised, it hits the profit numbers. They're predicting around 90 to 100 million INR in ESOP expenses for FY26, something for investors to factor in.
Okay, let's try and nail down some of those key revenue figures. What were the actual standalone numbers for Q4 and the full year?
Okay, standalone revenue from operations in Q4 FY25. 4,114.5 million. That's up 50.5% from Q4 last year. Significant jump. And for the full year, FY25, it was 13,026.5 million. That's a 68.0% increase year over year. Really substantial growth.
Wow, those are big percentages. Makes you wonder, though, how does that stack up against competitors? Are they just riding an industry wave or really outperforming?
That's the million-dollar question, isn't it? Context is everything. We don't get that direct comparison here, but the numbers themselves are strong.
Okay, what about profitability then? Adjusted EBITDA.
Right, adjusted EBITDA. So for Q4 FY25 standalone, it was 379.3 million, which is up 39.6% year over year. And remember, adjusted EBITDA often excludes certain items to show core operational profitability. For the full year FY25, the adjusted EBITDA was 1,244.9 million. That's a 45.5% increase.
And the bottom line, standalone pack.
Standalone profit after tax. In Q4 FY25, it hit 319.6 million. That's a 66.8% increase year over year. Very strong. And for the full FY25, the PIT was 874.8 million. That's nearly double the previous year growth of 98.7%. So yeah, the revenue growth is definitely flowing through to the bottom line.
Okay, impressive numbers. Let's shift over to the balance sheet highlights now. What jumped out at you there?
Well, one of the biggest shifts is in intangible assets, a huge increase. And like we just discussed, that's largely tied to capitalizing those Zadex and Fleet Solutions platforms. It shows a major investment in their own tech.
And they also list intangible assets under development. What does that signal?
That tells us they're still actively investing in R&D, pouring money into building out new features, new modules for their products. It suggests they're not standing still, planning for future innovation.
Investments also saw a big jump. What's behind that?
The presentation is pretty clear here. It reflects strategic acquisitions. They specifically mention buying stakes in TaxSpanner and Mobileware. So they're using cash to buy other companies or parts of them to, broaden their services or market reach.
Which always brings up the question of integration, doesn't it? How smoothly can they bring these new pieces into the fold?
Absolutely. Acquisitions look great on paper, but making them work is the real challenge. We don't see much on that here, but it's a key factor.
Were there other big shifts on the balance sheet snapshot? They compare March 2025 to March 2024.
Yeah, a couple of other things stand out. Property, plant, and equipment, or PPE, went way up from about 25 million to nearly 397 million.
Wow.
Yeah, quite a leap. Could mean investments in offices, data centers, that sort of physical infrastructure needed to support growth. And as we covered, intangibles went from roughly 82 million to 544 million, and investments from about 260 million to 860 million really underscores that growth and acquisition strategy.
Okay. Now, they included a chart showing quarterly revenue trends over the last few years. Did any patterns emerge?
Oh, definitely. It's quite clear from the chart. Q3 and Q4 are consistently the strongest quarters for revenue. We see that pattern repeating in FY23, FY24, and now FY25. It strongly suggests there's a seasonal element to Zaggle's business, maybe year-end spending, budget cycles, something like that.
That's really useful context, important for thinking about future quarters. Okay, beyond the pure financials, what about KPIs? Key performance indicators, how are they tracking success there?
They highlight aggregate users on their platform. That reached 3.28 million in FY25. It's up a healthy 20.1% from 2.73 million the year before. So more individuals are using their systems.
And on the business side, corporate customers.
Also growing. They had 352 corporate clients in Q4 FY25, which is up 12.5% from Q4 FY24. And looking at the full year, they went from 12,280 corporate customers in FY24 to 1,476 in FY25. That's a 14.7% increase.
Interesting mix of growth there.
Yeah, and the types of companies they're signing are pretty diverse too, which kind of speaks to the potential flexibility of their platform, maybe.
Good point. The presentation actually lists some recent customer wins and partnerships, gives us a flavor of who they're working with. Any big names?
Yeah, some recognizable ones. For Zaggle Save, they mention Indus Towers. Tech Mahindra, apparently already a Save customer, added Zaggle Zadex. Siemens Limited is using Zaggle Propel for rewards. Hanasa Consumer, that's the Mama Earth parent company, is using something called Zaggle Zoyer. They also call out Google Reddington and Thomas Cook for corporate travel, Bank of India for card use cases, and making Zaggle Save available via the Kika HRMS marketplace.
That's quite a list across different sectors and using different parts of the Zaggle offering.
Exactly. And the contract terms vary too. Some are perpetual, others are for 1, 2, or 3 years. Suggests a mix of long-term relationships and specific projects.
So let's zoom in a bit on those offerings. What does these solutions actually do? They give some snippets.
Right. So Zaggle Save seems to be their core employee expense management and benefits tool. They talk about features like easy reconciliation, setting spending policies, getting consolidated statements, real-time approvals, ensuring compliance. Pretty standard stuff for expense management, but presumably done well. Zaggle Zadex is the platform that includes their credit card offering. Zaggle Propel is for rewards and recognition. Zaggle Zoyer is the one tailored for Honasa. Then there's a fleet program managing spending for company vehicles and Zaggle International Payments, or ZIP, for handling payments globally.
Sounds like they're trying to cover a lot of ground in corporate spending. Okay, shifting gears a bit, who's running the show? Any highlights from the management and board overview?
Well, the founder and chairman is Raj N., described as having tech, fintech, and investment experience. There's Aravamudan Krishna Kumar with a background in retail banking, M&A, Abhay Deshpande Rasaheb, co-founder of MarkJack, Arun Vijay Kumar Gupta, PhD in Economics and Engineering, Financial Banking Experience, Virat Sunil Diwanji in Tech FinTech, and Prana Tandon, Commerce background, sits on other boards like Root Mobile, and Hari Priya is the company secretary. Seems like a board with quite diverse and relevant experience on paper.
Okay. Looking broader again, the market opportunity and their strategy, what's their pitch there?
They point to a very large addressable market. They cite a Frost and Sullivan report projecting the overall payments market revenue in India to top euro 1,750 billion by 2027. So, huge potential. Their business model mixes SaaS, software subscription fees, and fintech revenue streams, so multiple income sources. And they list their key strengths: experience management, the strong financials we've discussed, a multi-product strategy, that big market, their tech platform and network, an ecosystem approach, customer retention, and supposedly low customer acquisition costs paired with good retention.
So positioning themselves as well-equipped for a growing market. Now, how have they funded all this growth and ambition? They mentioned the IPO and a QIP.
Right. They raised money via an IPO back in FY24. The presentation breaks down how those funds were used up to March 31st, 2025. A lot went, as you'd expect, towards customer acquisition and retention, tech and product development, and paying down some debt. The unused portion was just temporarily invested. More recently, in Q3 and FY25, they did a QIP, a qualified institutions placement, raising nearly $6 billion, and the plan for that money: more debt repayment, strategic investments, likely more acquisitions, general corporate needs, and an advance payment for another share acquisition.
So clearly fueling up for more expansion and maybe M&A activity, which ties into the acquisitions and consolidated view they provide.
Exactly. During FY25, they bought a majority stake, 53.32%, in Span across IT Solutions, making it a subsidiary. They also invested significantly in Mobileware Technologies, taking a 38.91% shareholding, making it an associate company. So the consolidated financials for FY25 ending March 31st reflect these additions. Interestingly, the impact isn't huge yet. Consolidated revenue was $13,037 million versus standalone $13,026 million. Similar small uplift on the profit side. Early days for those integrations, perhaps.
Right. And finally, the auditor's opinion. Crucial piece for trusting these numbers.
Yes. The independent auditors, MSKA and Associates, gave an unmodified opinion. That's on both the standalone and the consolidated financial results for the year ended March 31st, 2025. Essentially, it's a clean opinion. The auditors are saying the financial statements give a true and fair view, according to the accounting standards. No major red flags raised in the audit report itself.
Okay, let's wrap up this deep dive then. What are the main takeaways for you?
Well, overall, Zaggle has shown really strong financial growth in FY25. Seems fueled by a mix of things: expanding their product range, winning new customers, and executing their strategic plans. They're clearly using both organic growth and acquisitions to expand their footprint in what they rightly identify as a large and growing market for payment solutions. And that clean audit opinion adds a layer of credibility to the numbers they've presented.
Okay. So considering Zaggle's whole mission is spend simplified, and we see these acquisitions bringing more pieces together, here's a thought to leave you with. How might this increasingly integrated platform evolve? Could it go beyond just simplifying spends to actually, transforming how companies handle finance and expenses? What new fintech areas might they logically move into next? Something to ponder. Thanks for joining us on this deep dive.